Markets are seeing a risk-on sentiment following last night's presidential debate between President Donald Trump and former Vice President Joe Biden. Stocks are up. The S&P 500 is up more than 1%. However, gold and silver are down. Here to talk about the implications of last night's debate on the economy is Will Rhind, CEO of GraniteShares. Will, I'm so happy you're here to talk to me today. Welcome back to the show.
Thank you, David. Always a pleasure to be on.
Markets are up today. The S&P 500 is up more than 1%. Do you think that the markets are digesting last night's debate as good news?
I'm not sure if it's good news per se, David. I think it could be either apathy in terms of the market doesn't really care. It was a messy debate for anybody that watched it. I'm sure you would concur. And perhaps the only thing that came out of it as far as the gold price or the gold market is concerned is that the messiness of it in terms of the combative nature between both of the candidates perhaps showed us that the parties are further apart on stimulus than we perhaps thought. But I think other than that, we didn't really learn anything new from the debate last night.
So there were no new initiatives from either side that were revealed to you, Will?
Not as far as I could see. I thought that it was a kind of a masterclass in obfuscation in terms of, two politicians basically telling their respective bases what they wanted to hear. And I think, to me, there was no new news in that.
Okay, so following that logic then, would you agree that gold prices were on a downtrend anyway? Because if nothing new was revealed and if no new sentiment was brought into the markets, it's possible that we're going to see risk on anyway this week. Would you agree or disagree with that statement?
To a certain degree, I'd agree, David. I mean, the gold price has been on a bit of a downtrend over the last, couple of weeks or so. And I think that's largely on the back of the resurgence of the dollar, and that's largely on the back of doubts or indeed, hesitation from the market's perspective about the prospects of getting a new stimulus deal done. But I don't think that stimulus or the lack of stimulus is a bearish thing for gold as much as it's a bearish thing for the stock market. So I think that this is, an administration in terms of the Trump presidency that, has made the stock market, a huge part of the economic scorecard, so to speak. And so I think that the chances of a stimulus getting done before the election are probably a little bit higher than perhaps people think.
So let's break it down now. Let's start with assuming a Trump re-election now. So he wants to continue the Trump tax cuts, and he wants to continue sort of the same posture of foreign policy as before, is what I interpreted from the debates. Now, what effects would this have long-term on gold?
Well, I think one thing that we can be almost certain about, David, is the big winner from last night's debate was stimulus. And I think that irrespective of the party, whether it's Trump winning or whether it's former Vice President Biden, I think that both candidates have really committed to stimulus. And that's not surprising because, various polls that have been done, here in the States, obviously more up to the election, but over the past 12 months have shown that the median voter in the United States is overwhelmingly in favor of stimulus. So that means that median voter wants stimulus, so therefore the politician has become, the price taker instead of the price maker. And therefore, I think one thing that we can be sure of is that we're going to get more stimulus, irrespective of who wins the election.
But I think the source of the stimulus will be different regarding who wins, right? Because let's say if Trump gets reelected, what he would want to do is cut taxes or maintain his tax cuts. Whereas if Biden gets elected, what he would want to do maybe is increase stimulus through maybe an increase of taxes through certain sectors. Would that be correct?
That could be correct, David. But I think ultimately, it all falls back to the Federal Reserve. And irrespective of, what your spending plans are going to be, ultimately that money has to come from somewhere. And we've seen the playbook for that. Time and time again. I think the playbook is that the central bank steps in and the central bank prints more money, and that is favorable to gold.
Okay. What about global stability now? Usually when investors see risks in either geopolitical stability or a potential conflict abroad, equities would go down. And we're actually seeing the reverse now. So are investors pricing in maybe a little more peace, a little more resolution with trade wars with China following the debates?
Potentially. I mean, I think in terms of what's happened vis-a-vis the Trump presidency, the dominating narrative has not been wars in foreign countries. It's been about trade, and it's been particularly about trade with China. And that's where the tension has been. And of course, that particular tension very much moved markets, for a considerable time up until the first stage of the trade deal got signed. And to a certain degree, all bets have been off since COVID took over. So it remains to be seen, what happens with that relationship, and whether the two sides can agree and get that back on track. But certainly, I think that's going to be the dominant narrative in terms of the economic policy around foreign trade.
Yeah. We also saw the two candidates disagree over how to recover from the coronavirus and how to stimulate the economy back on the right path. Do you think that this would have any impact either way on metals prices for the foreseeable future?
Yeah, I mean, I think that, to the extent that, if I interpreted it correctly, what Donald Trump was saying was he wanted to open or reopen the economy, and what Vice President Biden was saying was wanted to open the economy, but with strings attached. I think that on the Trump side, if you are more aggressive, dare I say, with doing that, then you may see more economic activity. I think that could be positive for gold in terms of having this stimulus result in some kind of inflation in the economy. And that is a big concern for investors and one of the reasons why people are buying gold at the moment. But of course, on the other side, if you have a more restrictive policy and you have continued lockdowns or a shutdown of the economy, which results in deflation, then again, it's a very, very difficult situation to be in. I think the flight to safety benefits of gold will really come in.
Finally, Will, regarding this issue, there are a few more debates coming up before the elections. What would you like to see discussed, and what would you like to see resolved in terms of having a debate before you can make up your mind as to whether or not the economy is going to be going back on the right track or not?
Well, it'd be nice to talk about things that could have made sense, I think, in terms of getting a proper discussion going rather than just sort of shouting at each other. So that would be one thing. But I think the one thing that was probably absent from last night was foreign policy. Not really much talk about that at all. Obviously, the coronavirus itself, I thought by far and away is the prevailing narrative of 2020. And although it was talked about, I don't think it was really discussed in the way that perhaps you might think, given the gravity of the situation.
Okay, so just to follow up on that now, Will, one of the dominant drivers of gold prices is inflation. Do you think an inflationary or deflationary environment would be affected by the outcome of the elections?
Yes, very much so, David. I mean, I think, we've got an environment where we could have inflation really, and real inflation for the first time in several decades. And of course, the Federal Reserve recently talked about that, saying that they're moving to an environment which was, in a way, actively encouraging the fostering of inflation in the economy, because the alternative, disinflation or in fact de-inflation, deflation is something that nobody really wants to see. So inflationary policies, I think, very much from the central bank down will be the order of the day, and that all things being equal is positive for gold.
Will, thank you very much for coming on the show today. I appreciate your thoughts.
Thank you, David. Appreciate it.
And thank you for watching Kitco News. Don't forget to subscribe to our channel for the latest updates. And if you're watching this on YouTube, comment down below on how you think the presidential debates last night affected your outlook on metals prices, the economy, and stocks. I'm David Lin. Stay tuned for more.